Hi, good evening. Welcome to our weekly market outlook. Today is 14 July 2014. So as usual, if you can hear me, just give me a yes. Okay, very good. I saw lots of yes coming, right? So just a brief introduction of our webinar. Our webinar consists of 4 parts. The first part is the fundamental analysis. It's the recent economic outlook. The second part is this week's events. So if there's any events which has happened this week, which probably will go affect the currency market or the other market like equity, fixed income, we'll just brief to you what's the weekly events for this. So for this week, of course, the key data will be the Chinese GDP and also the Janet Yellen's speech in tomorrow and the Wednesday night. So on the third part, we have the chart analysis. So from the live charts, we share with you what kind of direction you probably can trade for this week. And in the last part, we have the Q&A sessions. So on the Q&A sessions, if you have any question, you can just type in the box. So in the end of the session, I'll answer the questions. So let's start our today's webinar. For this week, everything is on the China GDP and the US Fed Yellen testimony. Rest of data is quite light. So of course, these two data I think is quite important. It's not only affect the financial market for a week or 2 weeks, it probably will have a few month impact. So we will spend some time on the Chinese economy at this moment. As you know, we in the previous few weeks or month we spent lots of time on analyzing the Federal Reserve, the European central banks, or even the Bank of Japan. But China was very quiet in the past few months. So today, since the GDP is out on Wednesday, so we just spend a little bit time on that. And believe me, on second half of the year, I believe that there is the possibility that sometimes the Chinese market will gain the attraction from the market especially when like the first quarter, like the first quarter this year, right? You hear some credit crisis from the China and also some the growth slowing down. But since after the second quarter, the Chinese government started doing the stimulus, which is to put everything on stable. So we will just give insights of what's the likelihood of the GDP announcement in 2 days, and also what's the policy stance in the second half of the year. So as usual, we take a look on the last week's events first. China PPI jumped to minus 1.1%. PPI is those kind of inflation which are focusing on the production manufacturing. So for China, which is not really a consumption-based economy, so sometimes I think PPI is sometimes even at this point in time is more important compared with the CPI. So the PPI jumped to minus 1.1%. That is the best number in the past about 2 to 3 years time. No, 3 to 4, 5 years time. So this is telling you that the demand and the manufacturing activities in China is improving at this moment. So it's a pretty good sign in the short term for the Chinese number in the second quarter. And also investor pay lots of attention on the FOMC minutes last week, but they might be a bit disappointed. And so there was not too many meaningful information tells you that when the Federal Reserve is going to raise the rate, and also they did not tell you about any of their monetary policy plan in the second half of the year. Probably the only meaningful information is some federal officials saw investors too complacent on the risks. So, but the market also pretty ignored this kind of news, as it seems like the Fed is still quite comfortable with the current equity prices and the VIX, volatilities. So that's the reason, although we see some equities slowing down last week, but that is all because of the Portugal defaults, right? There's one financial institutions in Portugal delayed the payments on that, but after that the the policymakers, even the central banks, say they will do something to help on that. So give the investor the assurance that the defaults, the debt crisis will not appear in the Eurozone in the near term. So Australia unemployment rate also rose to 6%. That's not too many. That's not probably it's not too very important information, but it still probably tells the RBA that they still need to put the monetary policy in a dovish stance, not hawkish. So it's also quite unlikely that they will raise the interest rate by the end of the year. Also, they are also unlikely to cutting the interest rate. Someone say the display is not showing. Is it clear? Is anyone can see the pictures very clear now? It's last week's events now. Okay, great. Lots of people say can see. Okay, so if let's say sometimes it delay, it could be the next speed from our side or from your side. So you can just pay attention to my speech. Okay, so the RBA is unlikely to raise the rate, but also they are unlikely to cutting the rate. So if that is the case, how to value the Aussie in the long term or in the midterm at least? Probably we will look at the Federal Reserve policy, the Chinese economy. And the last piece of news of last week is the China exports remain solid in June, gaining 7.2% year on year. So we see the exports number going higher. We see the manufacturing data in second quarter in China goes higher. So most likely it will tell you that the GDP for the second quarter, it should be higher than the first quarter. So if that is the case, that probably will provide some support to the Aussie dollar in the near term. So what to watch this week, as I mentioned just now, besides the China GDP and the Yellen testify, you probably also need to look at the German zoo tomorrow and the US retail sales tomorrow and the New Zealand inflation on Wednesday. The New Zealand inflation also very important because if the inflation continue to stay at the high side or at least not going down, that is most likely the RBNZ will raise the interest rate again this month. But if not, the inflation going down, I would say probably the Kiwi will have a sharp selling off because the RBNZ likely to tell you that okay, because the inflation is calm already, so they probably want to take a break for this month and keep the interest rate unchanged. So watch the inflation for the NZ this Wednesday. It's very important for the Kiwi at least for this month. As usual, we also have a macro summary of what happened last week. You can see that although the some Portugal crisis are not even a crisis, some Portugal defaults events put some nerves on the market, but the US dollar as a last time as a safe haven currency, should go higher, but it's not happened last week because we see most of the currencies outperform the US dollar last week. Right. So it's pretty sure that the US dollar now is no more a safe haven currency, and it's tracking the economy quite closely. If the economy going down, so dollar also going down. So if the economy going higher, the dollar will also going higher. So this mindset we have to get a bit clear is if we want to talking about a safe haven currency, so Japanese yen is obviously the best safe haven currency. You can see last week the Japanese yen is outperformed the greenback by 0.55%. And dollar, you can see that it's a slightly going down, but after the Friday we see the governor in the Europe said the governor in the Eurozone saying that they will help to solve the problem. So you can see dollar goes higher again. So look at the next charts. You can see the US Treasury yield and the dollar yen also lower last week on the Portugal concern, right? So you can see from the week from 7 to 11, right? So from 7 to 10, you can see the Treasury yield going down. Treasury yield going down means lots of people are buying the US Treasuries because it's the safe haven assets. So same as the Japanese yen, right? So you can see if you're a currency trader, you see this kind of momentum to appear the treasury when lots of people are buying the treasuries. So on the same time, you can also consider to buying dollar yen, right? So and you see on last Friday, you can see that things a little bit calm down. So dollar yen go higher slightly. Also, the treasury yield stabilize around 2.52, 2.53, this kind of level. So I know there's a lot of dollar yen traders in our platforms or even in other platforms. So lots of people will ask me, how to look at the dollar yen when the Shinzo Abe, the Bank of Japan, is so quiet at this moment. So always look at the U.S. Treasury yield, right? If the U.S. Treasury yield has a chance to go higher, you always look at to long dollar yen. If the U.S. Treasury yield go lower, you always look at to short dollar yen, right? So look at if you're very good at knowing what Federal Reserve is doing, and you are very sure about where the rates is going, so you can always look at the dollar yen. Equity last week also go lower. The dollar index also go lower, right? So equity, although it's go lower slightly, but it still remain in the historical high level. It's not necessary, to see the Portugal news and say this could be the time, the equity start to going down, right? So it's quite unlikely. So what can drive the equity prices for this month? I'll say it's the earnings, because the second quarter earnings start to kick off today. In the coming a few weeks, more and more companies will release their earnings report. Janet Yellen and the Federal Reserve are likely to give you a very clear direction of what they are going to do. So if that is the case, the market probably will not focus on the Federal Reserve too much. And I doubt that Yellen will give lots of meaningful information tomorrow. It's quite unlikely. So she will still tell you that everything is data dependent, and the Fed is aware of the risk in the current financial market, and they will monitor the condition very carefully. And regarding the rate hike, they will tell you that probably it will be somewhere next year or even 2016. Decide depends on the data. I mean, all this kind of a script is like everyone already knows already, and no one really expect that some new important language will come from Janet Yellen. So now I think the key risk is the earnings. So if you trade the US dollar, you see the correlation since beginning of July, even in last month, you see the correlation between the equity and the dollar index is very high, right? So if you see the earning reports, it's very upbeat, it's very strong, and you probably can looking at to long the US dollar to show other currencies like euro, right? So because the reason is the macroeconomy tell you that the earning report tells you the macroeconomy is improving. So you will go higher, then dollar will also go higher. Equity might also go higher as well. So my philosophy, my belief is, although we are lots of people here are not trading Forex, but you always need to look at the equities and the fixed income, the bond market. So that tells you a more comprehensive story of what happened in the market. So it's give you a better direction. So lots of people also are guessing that you can see the next slides. You can see that why euro go lower sharply and also go higher sharply today. The reason is probably you are not aware the news is there's one company called I might not pronounce this word very clearly. It's called Banco Espírito Santo company. Okay, it doesn't matter. It's this is a Portugal financial institutions. It missed the payment on some commercial papers, so people are worried about whether the euro debt crisis will come again, by Portugal, by Spain. That's why you can see that if you look at the charts below. One is the Portugal bond, which is in white color. You can see that it goes up crazy in a few days from 3.6%, almost touch 4%. It's quite a large percentage. And also the euro, right? You can see that it's selling off from 1.36 1.30 all the way down to 1.3580 discount level. Not only euro goes down, you can see the gold also selling off. I have a colleague in China is asking me why gold is going down so much, and I tell her that it's because of the debt crisis. And she asked me, it's a good time to to continue to sell, to follow the market, to sell the gold, sell the euro, or it's time to pick up. And what I tell her is, you probably can wait until the situation stabilize. But this kind of scenario, it's very tough to trade, because you need to watch the market like every second, right? Any news coming to say that the people are willing to to settle the problem, then price will go higher, and you probably will not have you don't even have enough time to react. So today, and even on Friday, it say the central banks assures that Portugal, this company is protect after a parent company missed short-term debt payment, are failing to ease credit concern. They may also suffer losses. So the people are willing to, the central bank, the ECB, also the rest of the policy makers, they do not want to see the euro debt crisis to coming again. So all these kind of a small thing come up, they probably will stand out to help. But from here, at least because today we are not going to touch euro anymore. So I just share about my own thoughts, right? Okay, although this is something just 1 or 2 days events, but it tells me one thing: the current eurozone economy is still very fragile, right? You can see the PMI, the eurozone PMI data is dropped from the historical peak, or not historical peak, from the highest level in the 3 or 4 years, So now start to drop already for the 3 or 4 months, and you can see the uneven growth in the eurozone is more clear. It's very clear that the Germans still hold against of the economy growth, but some peripheral countries like France, France is a core economy, but some peripheral like Portugal, like Spain, they are also not doing very well. So this all this evidence are enough to telling us that the eurozone recovery might start to not say going down, but might start to fade at this moment. So this is also now a positive news for the euro dollar, as the ECB, they need to do more to support the economy. If the ECB do more, means they need to provide more stimulus. So if this is the thing, euro going down, right? Because more money to be printed and more liquidity to be provided by the central bank. That is the negative news for the euro. Okay, now we take a look on the China GDP insights. We give our forecast first. What's our forecast based on the recent economic data and the financial condition in China? So the target mini stimulus we have seen in the entire second quarter, that may suggest a high growth figure comparing to Q1. The Q1 number is 7.4. So the Q2 number, we think probably it's around 7.5%, right? So look at some positive news. The positive news is the trade balance improved substantially in second quarter, which is 5 times to first quarter. And if I'm not wrong, it's 1.3 or 1.5% compared with the same quarter last year. Manufacturing PMI also has been bottomed out in late first quarter this year. Especially the large SOEs have been benefited by the lowering interbank lending rate. So that's the good news. The bad news is people will argue that the housing market is slowing down. But at least that I would say is to limit the upside of the number. Probably you will not see 7.6, 7.7%, but because of the exports picking up, because of the investment, the government investment picking up, so you probably will see the number to rise from 7.4 to 7.5% in the second half of in the second quarter. Right. The other reason why we think the number will go higher is because of the last year, the second quarter is a very low base. So in this kind of situation, we expect 7.5% year-on-year growth. The market consensus, according to Bloomberg survey, is 7.4%. Right. So if the number can reach 7.5%, the Aussie should go higher on Wednesday morning. So the GDP time is at 10 a.m. Singapore and Hong Kong time. So pay attention on this number because everyone is watching this figure. Also, so people would say, what kind of policy stance in second half of the year? That is also very important to the global financial market and also to the especially to the Aussie and the Kiwi, right? So, in our point of view, we think that the target easing measures are likely to continue in the coming month. So why we say so is there's a lot of measures the government has to do it quietly or openly, really. So more than 60 railway projects, I think the exact number is about 64. The railway projects aim to approve by end of the August. So currently they only approve about 20 plus. So for this month and the next month, in this kind of 1.5 month, there's another 40 plus. They need to be approved by August. So if this is the thing happen, you will see the lending pick up and you will see the construction work picking up. Of course, that will help the entire growth in second half of the year. Also, the CBRC, the Chinese Banking Regulation Committee, they also just announced to adjust the methodology of the loan to deposit ratio. So what is that is, okay, in China, there's a rule that the loan to deposit ratio, you cannot exceed 75%. And lots of banks, actually this ratio, they already reached this level already. So what they need to do is they do some adjustment of the methodology of the calculation. So under the new calculation, under the new formula, probably the loan to deposit ratio will be adjusted lower. The new calculation maybe for some certain bank will from 70% to 65%, from 73% to 68%. So this actually will unlock further credit from the lenders because the lenders will have more room to lend. So also besides that, they will continue to do the next three things actually to make sure the second half of the year there is no tantric, no crisis from China. One is keeping the rates low. The second is easing the property purchasing, the lending restriction. If you want to purchase a house in China, there's a lot of restriction. The down payments for some city in top tier city like Shanghai and Beijing, you need to pay 75% of the entire property value, right? So on the average, I think the entire property value in China, I think it's about, like in Shanghai and in Beijing, it's about, if I'm not wrong, you need to, the payment, the entire value would be around 800,000 to 1 million US dollar, not Sing dollar, not yuan, it's US dollar, right? So the price is very high already. So if you want to purchase a house, if it's not your first house, it's your second house, you need to pay about 600 or 700,000 USD one shot, right, for the down payment. So they try to restrict. In the past few months or years, they try to restrict the home buyers, but now they see the price is slowing down, so they want to easing this rule. Of course, the fiscal spending, so it will accelerate. So the infrastructure buildings, the railway build up. So all these things are the main policy tools in the second half of the year. So some people will ask that, is it a good time to invest in the China shares, right? So for the domestic people, they are investing in A shares. For the overseas investor, they invest in H shares. H shares is a China company listing in Hong Kong. It's freely open accessed by the international investors. Also, some people like you sometimes you will purchase some unit trust, which the unit trust carry lots of Chinese shares holdings. So lots of people are asking, is a good time to buy the Chinese shares now, since the government still want to do the stimulus, right? So, but I tell them that the time probably is the timing might not be correct yet, because what people want to see for the Chinese equities rally is when the easing measures are benefiting the small medium enterprise, because that carries that occupy majority of the Chinese companies. So the time is not yet right now, right? You can see the iShare China large cap, which is the ETF. It's a very famous ETF. It's called China iShare shares. But so they have the large cap, they have a small cap. So the Chinese government, they started doing the stimulus, which is around beginning of the April this year. So I do a calculation. So the large cap, right, they outperform the small cap by 7%. So this is telling you that lots of easing measures that are just to help the large SOEs, the large companies, the 10%, 15% of the entire Chinese companies, but they have yet to well transmit into the private sectors. And according to lots of our surveys, that lots of small companies, this group of the companies, they still have severe funding difficulties, and they want the funds to do their projects, but the banks don't want to lend to them. And now even the Chinese government want to crack down the shadow banking and want to limit the size of the shadow banking. So for this group of companies, they have if they want the loans, they want the funding, they have the issues. But everything we tell you the good news, right? So everything is also not so bad, but at least we just don't think that it's the right time to purchase the Chinese stocks yet. But we also want to let you know the positive signs. If these positive signs are can be sustained, then it's also a positive news for the Chinese stocks market. But we just don't think it's the time is yet now. Okay. So when is the PPI picking up? So the PPI picking up means the demand from the manufacturers are picking up. Right, so we need to see about 2 to 3 months at least. The figure can continue going higher and higher. Then it tells you a stabilization sign. The other thing is the HSBC PMI. Right, we have been always talking about what's the difference between the HSBC PMI and the Chinese PMI, the official PMI. The official PMI focus more on the SOEs. It's a broad base. So the HSBC manufacturing PMI are focusing more on those kind of a medium size of the company. So their size of the company is about 400, and the size is pretty pretty small. So in the month of June, we can see the reading is already climbed above 50 at this moment. So also, if this is these two signs, if can continue to carry on, can be sustained, then it will help easing the small manufacturers' bad debts. So only that thing happen, we will see the Chinese stocks to picking up. But now it's still too early to see. If they still want to, do the historic, do the last time, the easing, then tightening, easing, tightening. If this cycle carries on, for the Shanghai Composite Index, probably it will forever range between 2,000 to maybe 2,500. So what are the key risks in the second half of the year? You need to aware. It will be slow. It will be still the slowing property market. And why is so important? Because it counts about 15 to 20% of the entire GDP, and that is the direct calculation. If we count the upstream, downstream industries, and then probably it will count about 40 to even 50% of the Chinese entire GDP, right? The steel market, the construction, that is all relevant to the property market. So if the pace slowing down accelerates, default risk will arrive again due to the complicated connection between the property developers, shadow banks, and even those large lenders. So how all this thing works is, if let's say a property company want to build a project, so they need the financing, right? So now the Chinese banks already banned the lending to the property developers already. So they have to go through the shadow banks or those kind of loan companies, or even the trust companies. So so the debts level are very high at this moment. So if the price are slowing down, so they have no revenue pay to those kind of debts. So if some companies first half of the year, 2 or 3 companies announce they cannot make a prompt payment, then if this kind of case happen, then there will be some jittery again, right? So this is the first. The second is also, we let you know the good news is the officials are trying to limit these contagions. by gradually easing the housing purchase restriction now. So these measures are likely to eliminate a sharp growth slump in second half of the year. Right? So all these things you need to watch very carefully, right? Because not all the measures can protect the growth, can reach their initial objective. Something will definitely out of control even in the near term. So if the thing happen, you will know what to do. So now mention, if anything happen, just look at the property side, the property market first, right? So there's also lots of property prices quite openly share the information on the website. You can see month on month, year on year, quarter on quarter, the prices whether go higher or go lower by the different cities. Reform, now we're talking something about the reform progressions. So since beginning of the year, some people are very excited to talking about the Chinese reforms. They expect some very obvious or lots of meaningful reforms this year. But I'll be talking these things. I think middle of last year that I don't really expect lots of those kind of heavy reforms to arrive in China, right? So now we can benchmark with China and the US. Actually, we noticed that the reform agenda is in China looks quite similar to the Fed exit policy. Both are very patient on the deleveraging process. So Fed taper is deleverage. The Chinese reform is also about the deleverage. So why they are very patient, very cautious, is because there's a lot of unexpected consequences need to be studied, right? So the policymakers are not like those kind of analysts, economists. You say you should do this. So, but for them, when they decide to do something, there definitely would be lots of homework, lots of studies behind. It's not one sentence or two sentences, so simple. So now we expect the Chinese government are trying to use the loose monetary policy, but using the tighter regulation to manage the excess risk taking could be the Chinese strategy as well. So it sounds very familiar, right? That's what Jenny Yellen mentioned a month ago. And when Yellen mentioned that she doesn't believe that the monetary policy at this moment could help the U.S. economy a lot, no matter it's tightening or loosening, but she believed that she can use the tighter non-monetary policy, use like the regulations to impose on the Wall Street banks to control the risk taking. So actually this is what China have been done already. You see, in the beginning of the year until now, they always keep the rates very low, and they always doing lots of monetary policy or non-monetary policy support. But at the same time, they post lots of rules on the shadow banking, on the lending restrictions. So it's pretty quite similar to what currently Federal Reserve trying to do. And also there's not a very high possibility that the China will exercise a very strict reform, is because they don't have lots of a crisis management experience in the past decades. So they have to be very careful if they any growth needs to be sacrificed for the structural and the financial reforms. So now we have the dollar yuan actually in our platform. So if you look at our platform, you can see the dollar CNH. CNH is the offshore yuan, right? CNY is the onshore yuan. So if you can also trade the dollar yuan at this moment. So at this moment, we can also give you some outlook, the medium-term outlook of what's the likely the trend of the yuan trading against the US dollar. So still, if we look at the two countries' interest rate, the spread should continue to narrowing, right? Because China paying a higher interest rate, US paying a lower interest rate. So now the Federal Reserve trying to probably will raise the interest rate by next year. So but China still want to push the rates lower. So even the China rates is unchanged. So a higher US dollar rate, a higher US interest rate, that will push the spread narrowing. So I mentioned just now it's partly because of the rising U.S. economy and the less dovish Fed to steepening the U.S. yield curve. So this is the this should be the negative news for the yuan because against the US dollar, right? Because the fundamental of the currency pair is they look at the interest rate. If the interest rate narrowing, the currency pair also show a react according to the interest rate spread. And besides that, we are also a little bit cautious on the outlook of the Chinese exports in second half of the year. Why we say so is why the first half of the year is the Chinese exports is so strong is because of it's a very strong Eurozone economy picking up. But now we can see the Eurozone growth on the aggregate basis is quite uneven at this moment, right? So if that is the case, probably the exports, the demand from the Europe, it could be a little bit slow. So the exports to Europe will be also slow. The second is you have to understand that if the currency is weaker, that is encourage the exports, not imports, right? So now the consensus is the euro currency in the second half of the year will go weaker and weaker. So this one actually will spur the Eurozone exports, but not imports, right? So, but for China, if Eurozone imports decrease, it's a bad news for them because they need to export lots of goods and services to the Eurozone. So these two things are not support for a strong yuan. So if you see yuan, it's pretty strong, trading US dollar against 6.2 or 6.19, I think probably is a good time to buy dollar and to sell the yuan. So besides the yuan, also the Chinese economy is have a very strong impact on the Aussie dollar. So just give, we have a lot of new members now, so just give introduction again why the Chinese economy is so important to the Aussie. The Australia exports that contribute around 20% of the entire GDP. It's a quite heavy amount in the developed nation, right? So China is the top export markets. So if you count about top 10 of the Australia export market, the entire number, the entire percentage of the Chinese exports, I think that reach about 40 to 45%. So it's a very high percentage. 10 countries, China already almost half already. So now overcapacity in the Chinese steel sectors starts to limit the gain of the Aussie for long term. Right? So if the Chinese steel sectors, you know, they already have lots of end products already, which is the steel. So they don't need the raw materials from the Australia. So what they need to do is they just continue using their capacity, using their stocks. So this is the bad news for the Aussie. But if in the near term, the rising PPI in China is sustainable in the coming month, which could be a positive sign for the Aussie because the Chinese industrial demands will pick up, right? So still we have a relative dovish RBA to cap the gain of the Aussie. So on the China side, it's in the near term, it still suggests us range trade for the Aussie dollar is a very good option. Also for the Federal Reserve, they are not showing a very clear direction of whether they will hike the rate next year or even in 2016 or even early next year. The Federal Reserve doesn't give a very clear signal. So on that part also suggests that the Aussie dollar will be in a range trade, not follow a uptrend or downtrend. Okay, after China, we are talking something about the FOMC minutes. FOMC minutes is very simple. I'm just screenshot some of the key languages from Bloomberg, which you all need to know is they are quite signs of increase. Okay, you look at the second paragraph, Janet Yellen under the minutes saying signs of the increased risk taking were viewed by some participants as an indication that the market participants were not factoring in sufficient uncertainty about the path of the economy and the monetary policy, the minutes say. This is very it's a very gray sentence, when I see this, okay. So let me explain to you why, okay. So signs of the increased risk taking, right? So are they talking about they are taking in bond market or in equity market? They didn't make it clear. If you say that take too much risk in the equity market, okay, so they are talking about the market might think the economy is too well. Actually, it's not too well, right? So if this is the case, the Federal Reserve would do more stimulus, not less stimulus. But if they are talking about the equity investor are too complacent in the bond market, it tells you that the investors are too worried the economy. So if that is the case, the Federal Reserve should do less. So it's a very gray languages. It doesn't tells you that what's the Federal Reserve want to do, right? So the both scenario can be, if in the both scenario it can tell you the different things. So in one scenario, the Fed tells you that we will do more. On the other scenario, the Fed will tell you we will do less. Also, you look at the second paragraph, or the third paragraph. The Fed official expressed a concern about the low volatilities in equities, in the currencies, and the fixed income market. So, if the low VOS in the equity market, of course, it's a good thing, right? But if the low VOS in the fixed income market, then it's a bad thing, because lots of people are pessimistic about the financial market. So this means simply it just not tells you everything. So the conclusion below, the Bloomberg also make a conclusion that they offer no new clues on the timing of interest rate increase, with officials saying the policy depends most on the evolution of the economic outlook. So totally, well, you can ignore last FOMC minutes and just focusing on what Janet Yellen trying to say tomorrow and on Wednesday. But I personally guess she will probably also tells you that the same thing about what we see, what have you seen in the minutes. So what to focus this week? Besides this, Chinese GDP. That's why we spend about 45 minutes on analyzing the Chinese economy for these sessions. Okay, so now let's go to the poll time. Today poll is very different. It's not guessing the price, but guessing the factors. Okay, which is the most important factors to decide the value of Aussie in second half of the year? You can choose RBA policy, you can choose Chinese economy, you can choose Fed stance, you can choose commodity price. You ask me, I will say all, but here you can only choose one. Wow, so far no one chose number 3 and number 4. 44% choose RBA policy. 56% choose Chinese economy. It's very interesting. So no one chose number 3 and number 4. So I have a question is, I want to ask the group in A is, if RBA puts the rate unchanged at 2.5% toward the end of the year, so what's next? Right, so it's very interesting. Actually, I noticed that, okay, because most of the people here are Asian people, so I noticed that the Asians are quite like to trade two currency pair. One is the Aussie dollar, and one is the dollar yen. If I'm okay, correct me if I'm not wrong, but based on my observations, quite a lot of people like to trade these two pair. So. But still, if you want to, it's just a poll, right? So if you want to ask me what's the stance, I will tell you that watch all the 4 factors. It's because that will decide that really will move the Aussie price every single minute. Okay, now let's close the poll, go to this week's events. Okay, so this is what you will see this week. Today has nothing. Tomorrow you will start from 1 a.m., which is tonight. Mario Draghi will speak, and tomorrow morning you have the monetary policy minutes from the Australia. But most likely, I would say there's not too many important information inside. In the afternoon, you will see the UK GDP. In the lunchtime, you will see the about 1 p.m. or 2 p.m. this kind of time, you will see the Bank of Japan press conference. Also, we don't expect anything from Bank of Japan. Afternoon 5 p.m. you will see the German zoo confidence level. The zoo index, you can see it's a confidence index. So this confidence index, most of people expect it will drop. I also think probably it will carry a very high chance to drop. So if this is the case, tomorrow should be a negative news for the euro. So tomorrow night you will see the U.S. retail sales. So after the U.S. retail sales on 10 p.m. Janet Yellen will start to testify. So tomorrow you can see actually the data is quite heavy for tomorrow. But what's the most important data I would say is the 10 p.m. Janet Yellen speech and the 5 p.m. the German zoo data. Wednesday also very important, since very early morning, 6:45 a.m. you will see the New Zealand GDP. New Zealand CPI, the inflation data. That inflation data is going to decide whether the RBNZ next week will raise the interest rate again, or they will keep the interest rate unchanged. And on 10 a.m. you will see the Chinese GDP and other data like industrial production. You can see the Forex factory forecast is 7.4%. Bloomberg forecast is 7.4%, but I think the figure can reach 7.5%. If that's the case, Aussie will go higher. After Wednesday, Wednesday you will see at night. Actually, Wednesday there's another testify from Janet Yellen, right? 10 p.m. again. So there's a two testify. Usually the first testify will reveal more important information based on the previous experience. So let's see what Janet Yellen say. And on Thursday, Friday, you really don't see lots of important data like jobless claims and some manufacturing index from US. So that's all the data for this week. So you can see the focus is on tomorrow and on Wednesday. So now let's go to the live charts. First currency, let's look at the euro dollar. Okay, euro dollar currently trading at 1.3625. So if you look at the hourly charts, you can see the trend is not so clear. I just draw a line here. After beginning of the month, there's a sharp selling off because of the improving US data. You can see that now the euro dollar just trading within a range, and the range is between 1.3655, and the lower range is about 1.3575. Right. So the main direction for this pair, I think, is still go sell, not go long, right? Because number one is the economic data is not so strong at this moment, right, in the eurozone. Number two is Mario Draghi still supports or lower euro, not higher euro. And also from September onwards, there's a more and more easing from the ECB, will be done in the Europe. So we are still waiting for the price. Actually, might go to maybe 1.3640. When the price reach this level, we probably will go to short this currency pair. And then what's the level for us to take this to take the profit? We probably will look at around 1.336. this level. So there's a 40 basis point space for this currency pair. Okay, if you want to ask me that whether tomorrow Janet Yellen's speech will carry any upside or downside risk for this currency pair, I would say probably the risk is not so much. The reason is because after the FOMC minutes, after the beginning of the month, Janet Yellen carried some speeches. We don't think tomorrow there's anything new to come. And the most important thing for tomorrow is it's a prepared slide. It's a prepared speech. So everything, all the things she wants to say, it's already preparing the notes already. So we don't expect lots of surprise from here. So look at the euro dollar. We think 1.36 to 1.3645 or 1.365 will be the range for this week. Second pair, we are looking at dollar yen. Right, dollar yen. Maybe we look at the 4-hour chart first. It's in a downtrend since end of the May, partly because of the dovish Fed. So to push the dollar lower, so yen also go higher, right? So if we back to hourly charts, yen is a very tough trade at this moment because Federal Reserve, it's really unclear about its direction. But I think at the near term, because we don't have a lot of US data, and we don't have probably the chance for us to see new reaction from the Federal Reserve is very low at this moment. So probably we still can looking at the short dollar yen at this moment if there's any rebound, right? Because the treasury yield also not intend to move too much. So if that's the case, dollar yen also probably will carry some downward pressures. So we see some in the hourly chart. You can see some resistance level probably will form at 101.65 this level. So which is only about 10 to 15 basis point higher. So wait for the price to touch 101.65. Then we probably will looking at to short this currency pair. Aussie dollar, we are looking at the 4-hourly chart first. For this pair, I think the short-term direction is we want to go long instead of go short for the near term. Why we say so is Wednesday, look at the Chinese GDP, it's quite likely to push the price higher in the near term. Right? So in the long term, we still think the price probably will we go lower, not higher. So we need to look at the hourly chart to fix entry price. What entry price probably we can looking at? Now the price stands around 0.9396. Probably today and tomorrow it might not be a very good place a price to enter, is because of it might be some move or some price taking out from the previous positions, some taking profit, because Aussie has been in a very slow uptrend from 1.0330 all the way to 0.333 to 0.94. So probably some traders they want to square the positions. So if that is the case, probably you will see the price might going slightly lower tomorrow. Well, I don't hold a crystal ball, but tomorrow there might be some very noisy positions. So I think probably you wait for the price might have the time maybe to touch this level, 0.9370. Roughly around here, 0.9370. If the price touch here, then you probably can decide to whether can long Aussie dollar, and after the Chinese GDP, you probably can looking at to take profit if you are short, you are very short-term traders, right? But if you are slightly you want to hold the position for a while, you can see what is the Chinese GDP figure. right? So if it's 7.6%, definitely you can hold slightly longer, because it tells you that the Chinese economy in the near term is pretty in a good shape. Okay, the next pair we are looking at is gold. Gold is, you really need to the tracking the news very closely, right? You can see that all the way the last week is very crazy. All the way it's go to 1344.60. So why the reason gold going so high is because gold is also kind of a safe haven. So if the Portugal news, the bad news come out to jitter the market, then you will see that the price, the gold price shooting higher. Then after that, today the European side assure the investor that they will do more. They will assure they will not let this thing grow bigger, and then they will solve the problem for the near term. So gold just go lower again. So if we don't look at this movement, we just look at the slightly, we are looking at about a longer period as well. So we are still looking at about 1321, which still have about some space to go, right? So we are not really looking at to long gold for the medium term. We are always looking at to short gold in the medium term. But now the tough thing is just because the Federal Reserve not give their certain not have their certain idea about what to do in the next. So that's why the gold still hanging around, in the upside. But for longer run, we always look at the short gold. So of course, what's the good price to short is, at this moment, definitely it's not advisable to short below 1.3 thousand. Always looking at to short go above 1.2 thousand. So now the price is 1310. So looking like in the midterm, right? Look at the last month until now, the 1321, this level still kept pretty well. Okay, that's a few charts we introduced to you. Now let's go to Mario trade call today. Mario trade call today is to short euro dollar. Entry price is 1.3650. Stop loss is 1.3700. And the first profit is 1.36. The second profit is 1.3550. So I leave the trade call here. So if you have any question, you can just type in the box. Stefan asking, do you think the Chinese GDP carry a risk to reach 7.6%? I think the chance is okay. There is a chance about 20 to 30%, but I think although the data is pretty good, but the property sectors is the major drag of the Chinese economy in the second quarter because the price slowing down. Right? So I think 7.6%. It's unlikely. Most likely, I would say the number still around 7.5%. Right? And also the April, the data is picking up from the late April, not the beginning of the April. So the most of the data show the very strong improve is on May and June. Right? So all in all, 7.5% is our call. Celine Huang is asking, what's the trend of the Aussie Kiwi at this moment? I think the trend for the Aussie Kiwi still going lower, not higher, right? Because if the Chinese number to show the good numbers, it's not only benefit the Aussie, it's benefit the Kiwi as well. For the mid to long term, you can see the RBA and the RBNZ in the next coming a few months, the stance will be still very different. Right? Although the RBA don't cut the interest rate, but they will also not raise the interest rate. But on the other hand, the RBNZ that keep hiking the rates, I think by end of the year, probably the rate might even reach 3.75%. So if that is the case, it supports the Kiwi, not the Aussie. Also, the inflation in New Zealand is also much more severe compared with the Australia. Australia doesn't even have the inflation pressure now, but New Zealand already have a very strong inflation pressure already. Marlene Tan is asking, do you expect a hard landing in China in 2014? For this year, I don't think there's any hard landing concern from China. If let's say in a specific period of time, you see market are talking about the hard landing and all the assets are going down in China, probably there's a chance for it to pick up in the near term. Just pick up, and after a few weeks or months, you just sell. That's most of the Chinese traders they're doing. So they pick up the assets when the market is in panic, and they sell the assets when the market is, is celebrating. The last question I'm going to cover is from Raymond. Raymond is asking, will ECB announce QE in the third quarter? I think the ECB view is the bar for the QE is still very high. It's pretty unlikely they will announce the QE, but of course the market is keep calling that. The ECB definitely need to examine the current easing measures like the TLTRO and the lowering the deposit rates and the lending rate. And it's only after that they probably will, if still nothing works, they will announce to do the QE, but it's definitely not in the third quarter, or even not. I don't think even they will do it on the fourth quarter. The earliest time for them to do it probably will be the first quarter next year. Okay, so that's all for today's webinar. It's very good to see you guys again. I see you guys again next week. Good night.